Good afternoon. This is Mark Sebastian, the founder of OptionPit.com, with our trade idea of the week. Reminder, this is for educational purposes only. Options are not a suitable investment for everybody. You should consult your financial representative or advisor for information and advice on the use of options in a safe manner. Again, this is for educational purposes only. Reminder, a couple events coming up. We've got our Option Pit Boot Camp and the Option Pit Professional Trader Summit. The boot camp starts a week from Tuesday. Go to optionpit.com/events to get yourself signed up. Sign up now and get our Silver Synthetics course for free. All right, so GameStop had earnings tonight and absolutely blew the cover off the ball. If you look at the stock, it's near its year high, and it did better, a little further back when, but not much. Now what I want to show you is implied volatility, and look at that implied volatility. I mean, that is off the charts low, all right, over a 2-year period. Basically about as cheap as it's ever been. So when I see a stock up big and the implied volatility low, we've got too many people selling upside covered calls against this position. That's why the volatility comes in. It comes in because you've got lots of people slamming covered calls. They're slamming them in July or in June or, even in next week. So a stock that has some pretty decent fundamentals is up pretty decently on a down day in the S&P. Super cheap volatility. It kind of a cut and dry. There's a few things I would do, based on the term structure. If I was doing this in our strategy letter, I would look at it as a calendar spread. But because I want to keep it simple, this is a KISS type trade, I would execute a simple call purchase. I could buy the July 45s for a little over $1. I can buy the July 44s for a little over $1.40. I don't really mind buying either. And if we look at kind of the intraday range, look at a tick chart, you can see it did make it over 44 today and spent a nice portion of it. So I think 44 is in the cards. And if I look at the day's range on this option, it traded as high as $3, a lot higher. So probably too cheap. And I'm going to buy a little call just to see what I can get done. I'm going to start by trying to pay $1.40. I'm guessing I'm going to get joined. I'm not. All right, so I'm going to basically try and get this guy filled. All right. Let's see. I'm guessing if I pay $1.41, I might get filled. Oh, it's sitting on the NASDAQ, and I am the lone buyer. And I can tell it's a decent price. It's somewhere close to fair value because none of the robots are joining me. All right, so if I see robots joining me, that means I'm probably nowhere close to getting filled. I think if I pay 42, it'll tick. So let's see. See what I tell you? I paid $1.42 for that call. Call that a penny above fair value. So not the end of the world. All right, if you've got questions about our services or what we do or anything about us, feel free to give me a call, 888-TRADE-01. You can email me, mark@optionpit.com. All right, folks, on that note, I hope everybody has a great weekend, and I will see you soon I will see you soon and talk to you soon.